Hi guys, Harry Otis here, professional trader for 20 years. Started my career in 2005 and still alive in 2026. Wow, super strong market. That's the theme of the day. Look at this candle right here, picture of the S&P 500. We are literally in a bullish engulfing at the highs. Might not be that good. Approaching resistance right here. This market is up almost 1% today. Even after we had very, very bad news coming out of the weekend on the war front, where the negotiations broke down. Yet both parties are still open to negotiating. However, the U.S. walked away, and Trump is closing the Straits of Hormuz. So Iran and Trump now, and the U.S. are closing the Straits of Hormuz. Okay, and yet despite all that, market rips 1%. This is super strong action. Okay, before we get to this main topic of the day, in terms of the strength of this market, we always talk about the technical picture. Okay, we always look at the technical picture of the market first because this is the general trend. I mentioned it before, but it hasn't been a while since I mentioned it, so I'll say it again. So go with the market, so go with your trading, okay? You want to first establish a tailwind to your trading. If you want to go net long, you better have the market on your side, because if the market is on your side, the stocks that you pick will most likely go up. If not, even the best stocks that you can think of will also go down. So we always look at the market and its strength. Okay, so first the technical analysis. It's bullish technically. Okay, but again, let's bring in the moving averages. Why? We're trading above the 50 in red and above the 200 in blue, and we're hitting. However, we did hit this 685 6 level in the SPY, so it could be resistance. Okay, and guys, always tune into the end, because I will give you exactly my positioning, what I'm doing, what I did, and what I think going forward. Okay, you get the best insights on exactly how I think towards the end of the video. Okay, so let's continue. Technically speaking, this should be bullish. However, because in the past we have been, let's get rid of the moving averages. We've been in this chop zone for months. As long as we're still in this chop zone, I'm going to consider this neutral, although we're leaning bullish. I will reserve my bullishness until we break to new highs with the SPY 700 and going higher. Okay, but technically speaking, you can say we're bullish, but I'm going to reserve that for later. This is a very neutral stance, even though we are net long. And the reason we are net long is because this is a bull market, and there's just a correction in the bull market that happened recently, and nothing really changed fundamentally. The fundamentals have actually gotten better. Future earnings expectations have increased. Okay, we've had the manufacturing sector increasing for 3 months in a row. Very, very bullish. I mean, initial claims are down, jobs are doing great. There's no real fundamental issue at this point. That's why we're still net bullish. Okay, so technically speaking, we're going to stay neutral. Neutral, leaning on bullishness. Okay, we also pair our analysis with sentiment. Still fearful. Despite this great day of 1%, we're still in the fear category. Everything else is fear, extreme fear. So yes, the VIX, the volatility has been going down, but if you look at the VIX here, okay, we just closed below 20. Above 20 is high. Okay, just closed below 20. We were suspecting this move to happen. After a spike up, we wanted this to happen. I thought it was going to be this day here on March the 10th, but no, we had to have more of a fear. Okay, so as the market was going lower, the VIX wasn't breaking to new highs, so that was a very positive thing. So right now, we could get this prolonged down move, getting bullish in our outlook. So that would be good. Okay, so the sentiment here is still plenty of room to go to the extreme greed and stay there. Remember, guys, we were at extreme fear for weeks. Fear to extreme fear. This level was holding for 2-3 weeks, sometimes 4 maybe. Okay, we never even had a week in the greed category, let alone in the extreme greed. And this is a bull market. I'm going to get worried as a bull when I see greed and extreme greed for 2, 3, 4 weeks in a row. Okay, when people are really greedy and optimistic and happy, because we haven't had that at all during this entire bull market. Okay, that's why we've been saying it's climbing a wall of worry. Okay, so yeah, sentiment, beautiful. Okay, so let's get to the main event. Super strong. These markets are very, very strong. Okay, what evidence do we have? Well, first, U.S. begins blockade in the Strait of Hormuz. Trump warns Iran attack ships to stay away. So she's warning the Iranian Navy. I thought he obliterated the Iranian Navy, but I guess the Iranians have a bigger navy than he thought. So Trump is just going to close the Strait of Hormuz and not allow Chinese vessels to to go past, which is very, very bad. You would think that would be extremely bad news. He's escalating the blockage, and yet market rips higher, okay? You would think that oil, look at U.S. oil, okay? U.S. oil was up on the day like about 8 to 10%, and then it gave it up and closed near the lows, okay? This is extremely bullish behavior. Oil down is bullish, okay? So basically Trump, quote unquote, escalated the rhetoric in a war, escalated by putting U.S. ships off the Gulf of Oman and in the, the Persian Sea there, the Arabian Sea, sorry, to blockade any tankers going out of the Strait of Hormuz. So he's escalating the war, and yet oil goes down. You should always look at the price action. Maybe this was overdone. We're getting to a point now where oil is going to come down just like the VIX with volatility, and yet it still hasn't yet. It's still on this up move, okay? Oil was still above the 50, but still below the 20 and the 10. So I'm waiting for a move to at least the 50 first before a bounce up and another move lower, okay? As this war gets better. It looks like the people don't care. The market participants, the market doesn't care about escalation of the war because they think it's going to be over soon. This might be a ploy. Okay, we're not out of the woods yet, but so far the market is indicating that this war is not a big deal. They're putting it in the rear view mirror. Okay, so you have that. You also had like the semiconductors. Look at that, guys. Semiconductors, new highs. Okay, this is a leading index. This is the leading indicator, leading index in a leading market. Okay, new highs. Okay, the S&P 500 is going to probably go to new highs after these guys are up. Okay, and I like this sector, and the stock that we liked and made a video on yesterday was NVDA. It's in this chop zone. Once it breaks through, it's going to probably go even higher. Okay, a long consolidation period bodes well for a breakout to new highs in this stock. Okay, should go higher, which I don't know when. Okay, so you have all of these moves in oil, in the market, in the leading indicators that are telling you that this is very, very bullish. However, we're at the point on this episode where I talk about my positioning and my thoughts going forward. Okay, here I started adding some short exposure because I think we're getting very, very stretched. We're up like 9%. Okay, 9% in like almost 2 weeks. It's a huge snapback rally. This ended up being, I think it's going to be a bear trap. A lot of people were going short here. They're going to get killed, in my opinion. Okay, and I don't really like, technically speaking, a bullish engulfing on highs. I don't know if that's as good as an indicator as when the market goes down, then you get a bullish engulfing. Okay, so that's just a technical aspect. I just think that fundamentally speaking, this market goes up. Okay, however, because things are so stretched, I expect to move down, and I added some short exposure. Okay, listen to me. I am net long with a little bit of short exposure. Okay, if this market continues to rip higher, because a lot of this selling was, I think, pulled forward, because usually the market goes down in the summertime before we're having a summer rally. Okay, we had this move down before April even came. Okay, usually the market's up until April and then it goes down after April. Okay, now we had the down move before that with fear. So I don't know if that's going to repeat again in the summertime. So that's another bullish thing. Okay, however, we are getting stretched. That's why it was prudent to add some short exposure. Best case scenario is we just keep going higher, exploding higher like this area here, boom, boom, with minor pullbacks. If that happens, I will be glad to see my my small short positions expire worthless and my net long print. Okay, but if this market does go down, I will be covering the short positions quickly because I am fundamentally bullish. I think this market is showing a lot of strength, and it's market, like I told you, you're gonna get bad news. All you had at the low was bad news, and you still have bad news. You have no good news in this market. Okay, if you're waiting for good news, it'll probably happen when the SPY is like around here, 620, 630, and then you want to go long there? No. This is why you don't look at news cases and extreme bearishness. At the lows, you will always see extreme bearishness. That's why you have to go long. That was so difficult. We made a video around here, around the end of March, that we're going long, and we did go long, and we got rid of most of our short-term longs 2-3 days ago. Okay, around this level. Okay, I'm holding very little. I'm holding one out of many positions that I have here, but it doesn't matter. My net longs elsewhere will make it go higher. Okay, this was just an I added more to my longs, and I was waiting for a pullback. I didn't know how it was going to happen, but that's what you want. Okay, you want this extreme fear. And look, even now at the highs, we're not getting good news, which goes further to buttress my point that this market is super strong and you should be net long. Okay, so those are my thoughts. You see a lot of underlying strength in the leading semiconductors. You see a lot of strength in the oil market. Oil should have been ripping today. It should have been up 10, 20% and stayed strong. But you see, it's not. Oil is still not out of the woods, but this day today, closing at lows after a big spike on the news getting bad and the war is very, very positive. Okay, we still haven't broken the uptrend. I want to see more of a hit. Okay, maybe break below here the 84 on the U.S. oil WTI, WTI spot. Basically, this is what it is. So I'm expecting that to go down. Look, the semiconductors broke up higher before the market did, so that's good. So all of these factors are telling you this market is super strong. Okay, and I hope I'm wrong and the market doesn't go down, but it almost very rarely do I get the best case scenario for my portfolio. It usually has to come down a bit, but if not, whatever, I'll take it. So this is a good start to the week. Of course, April 13th, Monday, great. We're approaching resistance. I still expect a move down, okay, and coming to all-time highs here. So this is a very resistance-y type of zone right here from 685 to 700. Maybe people are going to start selling it up. I don't know. I just know that, generally speaking, you should be net long with a little bit of short exposure in your portfolio. All right, guys, later.